On to the big voice for the day. Vikas Khemani, President and CEO at Edelweiss Securities, joins us right now on the show. Vikas, really good of you to join us. Thanks so much for being on Bloomberg Quint.
Thank you very much for having me here, and congratulations on the launch.
Thank you so much. Thank you so much. It's a special day for us as well today. Vikas, is it a special time to be in the markets, or is it time to take some chips off the table, even if it's for a tactical move?
Well, it depends on what's your objective of the investing, but I do believe for long-term investors, it's a time to stay. There might be correction, short-term correction. You will never be able to time it out. So, given the fact that we are in the middle of a structural bull market, India's story is one of the most attractive story around the globe, and I think very well placed from next 5 to 7 years perspective. And if this kind of time, a situation is there, there's no point, optimizing on tactical moves. You should sell in this market only when you need money for something else. But otherwise, I would say that you just should remain invested.
You aren't worried about all that's happening on the anvil, and predominantly talking about the growth slowdown that is coming in. We've heard massive reports about, or many reports, let me not use the term massive, but many reports about job losses as well happening, job cuts happening as well. Now you could argue maybe some of these are due to automation, some of them are due to a general slowdown that is happening in the industry as well. And therefore, whether that brings into question this whole continued boom in consumption that we're talking about, which is probably necessary for the GDP numbers to move up as well.
So I think, in a shorter term, definitely there is a sort of impact because of the three big transformative moves by the government, namely demonetization, GST and RERA. All of them have had some or other, short-term impacts on the trade or industry or GDP. But all of them are supposed to kind of create a structural sort of growth profile for the country, bringing parallel economy into the mainstream economy, creating a lot more structural, opportunities in real estate space. So I think they are positive from long-term point of view. Yes, of course, they have caused some sort of impact in the shorter term, and that is what is the reason we are feeling, a lot of pain. RERA has led to a lot of slowdown in the construction activity, and which I think last 3 to 6 months you've seen, a significant slowdown. But at the same time, affordable housing is picking up big time. So the government's effort to kind of give a big push, create $30–40 billion annual stock of affordable housing is a very big move. So I think government is trying to, transform the economy, at the same time put it on a structural profile. This kind of job is not easy, especially in this country like India. I know we all are in some sense impatient, we all feel pain of it, but I do believe that, from a long-term perspective, it's all well. And that is also reflected by the, markets. It's not that markets are stupid, markets are also reposing the faith in long-term story of India. And I do believe that we are in a great time. It's just a matter of time, and I think government is also worried about short-term slowdown the growth. I think you might see some sort of stimulus coming about. You might see some sort of measures being taken, but I'm quite confident that we will see that back.
So you have preempted my question actually, because street is divided on stimulus, whether or not we should be formulating one at this point. Where do you stand?
So I don't know what is need of the hour is not necessarily. Stimulus doesn't have to be necessarily fiscal stimulus. The stimulus, in my opinion, needs to be spending in the economy. Now spending in the economy could be through various ways. Today, I think if you ask me, our investment cycle, if it can get kick-started in a big way, what we need is a lot more execution on that. We have had lots of plans, announced on the capital expenditure, but I think if we can step up execution of them, you will see money coming into the system. So let's say if you were to accelerate your execution of affordable housing, which is picking up, but it's not picking at a pace where probably it can be a lot more. So I think if that were to happen, you could have that. So government needs to, in my opinion, put a lot of money into the system, and also I think some sort of cash flow problem has been caused in the economy, widespread economy, because of the GST implementation. I think working capital requirements have gone up. That also has put some sort of so if there was sort of some sort of step taken to put back money into the system to pick up the lending from the public sector.
Planning is, they could compromise on the next year's target for fiscal deficit, and suppose there is a variation by 20, 30, 40 basis points compared to what we had in mind, or most of the economists had in mind. How would your FII clients react to it?
I won't worry. I think everybody has said, everybody has seen government's intention, right? If even they're taking a short-term 1 year, 2 year, leeway in terms of loosening it, I don't think anybody would mind it, because this government has been able to get the credibility around the fiscal deficit. There are no off-balance sheet item, so everybody believes what government says as far as the fiscal number is concerned. And when government right now growth is more important. So when government is sort of trying to loosen, let us say, fiscal deficit, I don't think market will be worried too much. In fact, market probably would cheer it up, because growth is the need of the hour, kick-starting economy of the need of the hour. So I wouldn't at all worry about it.
Because so let's assume we can't really time if there is a slowdown, when the slowdown will come about, if it does, and even if it does in the first place. What is it that could take the markets higher from here on? I know the principal answer is earnings growth. Where is it that you see earnings growth? If not in the next 6 months, then over the next 12 to 18 odd months.
I do believe, so earnings are picking up in the segment. So I think reason we are not seeing overall earning picking up. So hence we feel it's rightfully. So if you see financials, private sector, banks, NBFCs, all other financial, I think other than if you take the corporate lending banks, they are growing reasonably well. All the automobiles are growing reasonably well. Durable, consumer and consumer durable companies are growing on a volume terms 6 to 7%, which I think reasonably well. The only reason why we don't feel that kind of growth, because it is inflation is out of it, and hence you feel only 6-7% growth is not a good enough growth. So I think they are also reasonably growing well. I think widespread effect, if you ask me, will only be felt maybe in 18-19 when you start seeing asset quality pain behind, and even some of the corporate lenders will start growing. Credit also will start picking up. So maybe I think you will start seeing widespread effect next year. Some of the I am reasonably sure that whatever government is trying to do, that will also start taking some sort of effect. But in pockets, earnings have already picked up. If you ask me, of course, some of the sectors have pulled it down. Hence, you don't feel overall basis. But I think pharma pain is behind, IT pain is more or less.
Pharma pain is behind.
More or less behind. I mean, you can't see negative from here. I mean, you can only see positive from here, or you might see flattish. But I don't think you can contribute more negatively to it from here. I think IT pain is more or less bottomed out. You will start seeing only things picking up. So I think some of those sectors were also contributing to some extent, pulling down the economic growth. So if you see 2 or 3 drags, if they are settling down, and plus others pick up, I think next year we will see.
So we have seen IT and pharma both underperforming for close to 2 years now, or maybe longer.
Yes.
But some analysts also feel that there is a longer term structural shift in these sectors, and it won't be wise even to enter at current levels. You seem to be thinking otherwise.
Both sectors have different nuances. I do believe pharma sometime will definitely come back. I don't think pharma has two stories: export story and domestic market. Domestic market definitely long term sustainable, and export market right now is going through sort of regulatory challenges. I am sure the kind of institutions we have, they will come up this challenge and soon get back there. I think recently we released a very detailed report on Dr. Reddy's, where it's a part of our Braveheart series, and when our analyst has said that I think most of the pain is behind, and we think now Dr. Reddy's will start delivering good numbers, and he's done a detailed analysis and all. So I mean that reflects that analysts are beginning to believe that what's happening in the sector probably is going to turn around. It might be company specific, but soon I think it will kind of widespread. I mean other leading companies also will start getting benefit soon. So we are somewhere in the process where we believe the next 12 to 18 months pharma should start picking up. IT, I think again, we are going through sort of adjustment phase where, companies are going through phase where they have to deal with the cost escalation as well as, deal with the disruption of the traditional market. So this transition is going to take few years. But while this is happening, still companies are growing, 5, 7, 10%, which is not a bad, number given their, size and all those things. So we don't expect 20% growth from this sector, but so is the valuation. So given valuation and the growth, I think they are decent place. I don't think, IT is going to sort of go away. There is more of IT in everybody's life, whether it is corporate, individual, globally, locally. So I think those business models will get readjusted. This transitionary phase, partly it is behind, partly still some ahead. It could be
not so much IT in portfolios, I assume, these days.
Well, I think yes, and that is where I think maybe that's the reason these stocks are sort of trading where they are trading. So they will come back. While I'm not sure of whether they'll come back this quarter, next quarter, but they will come back.
For some time now, you've been selectively bullish, if I may use that term, on economy-facing spaces as well. Very, very selectively. Maybe it's been a stock-specific approach. The question is, would any of the economy-facing spaces make a comeback anytime? The reason I ask this to you is, one, the economy is not really showing any signs. AM Nayak spoke to us over the last 3 days, and he told us that he doesn't see any major infra push or large infra orders coming in for the space, barring maybe 1 or 2 companies which could get them. What happens to this pocket?
I believe that, if you see in this space, look at, L&T again, they should definitely get much more than, they have been getting.
So let's assume they will get.
They will get,
Right.
But
what about
you
the
look
others?
at a lot of other companies, the order books have been going up. You look at whether it is a company like Nagarjuna, KNR. I mean, you pick up, all the leading companies. The unfortunate part is that, we don't have many companies who can do construction. After L&T, the second largest company or more 10,000 crore company is Nagarjuna, and after that we don't have a next 10,000 crore company, which is like, next company is about 5,000-6,000 crore. So I think one side we are beginning to, and that is where I think this whole question of infra spending comes about, that one side government wants to spend 8 lakh crore, 10 lakh crore, other side don't have capacity to spend that, and that is where the bottleneck is. But at the same time, these companies are picking up the orders at a better margin, but execution capacity is only so much. You can only build so much overnight, right? And that is where the biggest challenge, and that is where, despite government's all intention to spend, they have not been able to spend. So that's why I believe that, I don't know how fiscal deficit will add or, what. So there is urgent need to execute and, push forward the execution. And I think affordable housing, recently I was told by, our analyst that, huge amount of effort is happening, where 40 to 50,000 crores of contracts are going to get awarded by some of the state governments for affordable housing. If that were to happen, affordable housing, you can create stock in 2 years' time. So, it can create jobs, it can create consumption of steel, cement and all those things. So, it could be positive.
Because you said you like autos, do you also like ancillaries, tires, batteries, e-vehicles?
See, again, the specific sector segment, but automobile as a sector will have to, do well as economy picks up, and I think it's been doing well. And ancillary ends up being beneficiary of that. There's no doubt on that. So there are again, there are a lot of within that sub-segments we've been positive on that, and I continue to remain positive on that. There's no doubt on that.
Okay, Vikas, 30 seconds before we wrap up this interview. If you were to be bullish on that one key pocket right now, one thing that you believe will make money for investors over the course of the next 12, 18, 24 months, which space is that? Which theme is that?
I believe that, I don't know if I can answer in 30 seconds, but focusing on rural economy, which currently is a very contra play, I think is a very, very big opportunity right now in Indian markets.
How do you do that?
You can play through irrigation stocks, you can play through fertilizer, you can play through chemicals, you can play through the companies which are focused on rural demand, where you have rural penetration, distribution network. So you can play through various things, but I do believe rural economy is set to get repaired over next 3 to 5 years in a very, very big way.